in preparation for the pre-sin. They'll be coming 2 weeks before the exams. All right, so please confirm you can see my screen. In the last conversation, we spoke to equator principles. So today we will have a session on sustainability reporting in Nigeria, preparation of it, challenges and the roles of professional accountants. So please confirm you can see my screen. I know we can hear me.
Yes, I can see your screen.
Okay. Thank you so much for that feedback. I appreciate it. Thank you so much. All right. So, the conversation around sustainability speaks to the disclosure of a company's environmental, social, and governance framework and everything that has to do with their activities. Disclosure and reporting is what sustainability is all about. Around these three, the triple bottom line on a company's performance, the people, and the planet, like we saw in the triple bottom line framework. So it's important for us to understand that transparency, accountability, and enhancing investor trust is the brain or the concept or the idea behind sustainability and the practices. And the rules for chartered accountants is to enforce and ensure this, because we are pivotal to enhancing reporting and also checking or auditing this strategic area called sustainability. So in Nigeria or globally, we have frameworks around the Global Reporting Initiative, the Sustainability Assurance Standard Boards, and the the Sustainable Development Goals that the UN came up with. And we also have the integrated reporting. So these are frameworks globally that shape and guide the sustainability concept around the world. So the key steps in preparing reports, like we have in the normal commercial audits, is first to perform materiality assessment, assess the materiality of ESG issues that have been identified that are relevant to the business and also those stakeholders affected. Another step is also, or the next step is data collection, getting reliable data, verifiable ESG data that would help to prepare this report. And the third one is stakeholder engagement, engaging stakeholders, not just the owners of the company or directors or shareholders, but talking about employees, investors, regulators, the community, and the environment at large where that company is domiciled. And then we have the fourth steps, talking about carving out the report content, having an executive summary, the ESG performance, talking about the pillars, looking at what were the budgets and the actual, and also auditing that same report and having, just like you have the company financial statements for commercial companies into profit making, you also have assurance providers auditing those data and that report on sustainability to give credence and some level of comfort to readers and the public that there's some level of reasonable assurance as to what was reported in the sustainability report. So that's generally around the preparation of sustainability reports. It follows almost the same order with commercial audits or commercial financial reporting. But I haven't looked at that. There are still challenges in Nigeria, significant challenges. Speaking to the first one on the voluntary nature, which is lack of mandatory rules mandating companies to report on sustainability. So that's one of the challenge. And the second one is low awareness and understanding of this sustainability requirement and the importance of it. Another challenge is the poor collection or availability of data and the quality of such data, the shortage of skilled professionals in such areas that have those expertise. We also have high reporting costs, short-term profit focus for companies, because that's mostly the aim of commercial companies or businesses in the commercial or the large-scale space. We also have infrastructure and technological gaps that are some of the prevalent challenges in Nigeria. However, we have the adoption of the International Sustainability Standard Board. Some of the standards that came up globally have been adopted by the Financial Reporting Council in Nigeria. So this is good news. And the global IFRS S1 and S2 have been adopted by FRCN, and the benefits are enormous. Speaking to the first one, the standardization and global comparability of sustainability reporting is one of the benefits. So just like we aligned with IFRS around 2011, 2012, 13, 14, companies transited from the Nigerian accounting standards, which were the former SAS. We also aligned practically with IFRS reporting, and that is also applicable to the sustainability standards S1 and S2. And the benefits, one of them speaks to global comparability, focus on financial materiality, which is investor relevant. Also, we have another benefit on better environmental, social, and governance data quality. We also have increased investor confidence and foreign capital attraction, especially as this is a global phenomenon. We also have regulatory adoption, talking about the Security and Exchange Commission support, especially where companies have aligned. In the last class, we looked at the Nigerian Stock Exchange, how they've made it mandatory for public listed companies, public interest entities to report on sustainability. So these benefits enhance trust and credibility locally and globally, and also capacity building opportunities for players in the economy. Now, some of the challenges of implementing these S1 and S2 standards is limited awareness and training, data gaps, especially for scope 3 emissions, that is for S2, talking about climate change, and also the skills shortage and capacity building needed. So these are some of the challenges on the implementation. And the cost also is seemingly high for some companies. The IT processes, the systems are seemingly costly, but then the benefits are enormous and cannot be overemphasized. The integration with existing frameworks is also a challenge, and also enforcement and monitoring of compliance are one of the challenges of implementation. So the Nigerian sustainability reporting is still developing, actually, and we are glad that it has started, because aligning with global standards is very important, and starting is the first step. So it's good Nigeria has started, and we must understand that the adoption is a game changer for us, because collaborating with governments, regulators, businesses, the academics, Nigeria can improve transparency, attract FDIs, foreign direct investments, and drive long-term sustainable growth for businesses. So it's key to understand that during exams, we should always mention the adoption of IFRS S1 and 2 by IFRCN. AA asked a question in the last 2 classes, and he asked if there's any enforcement or there are any regulations for the adoption of these sustainability standards in Nigeria. And we've come to this unit where it's clear that FRCN has adopted it and had added data, capacity, cost challenges, and some other parameters for companies to report. And don't forget, Financial Reporting Council governs audit matters, reporting matters around financial reports, audits of companies generally in Nigeria. So the adoption, it's a good step forward to ensuring businesses are sustainable, and people that run businesses, the planet is impacted positively, and also performance is ensured for companies. So that's the exam tip you could use in speaking to those boxes if a question on sustainability shows up in the November 2025 diet. All right, so that's it for this unit on sustainability reporting in Nigeria. The key takeaway is that Financial Reporting Council of Nigeria has mandated or ensured that this is integrated into the reporting framework of companies in Nigeria. And the roles of professional accountant is to either report or audit, since that's our job in that space, to either report financially or audit these financial statements. So that's very important to note, and that's a good way forward for companies in Nigeria, and that will help businesses to remain sustainable even in the future. All right, so any questions so that we can run to the next section? We're trying to run to ensure that we finish this sustainability conversation today. Any questions or any contributions, observations? Okay, if we don't have any, let's move to the next unit on the actual overview of the International Standard Sustainability Standards Board on S1 and S2. Let's look at these standards a bit in detail. So the IFRS S1 speaks to general sustainability disclosures, and the objective of this standard is to provide investors with decision useful information and sustainability related risks and opportunities that affects financial performance of companies. So this is the objective, or the main core objective of IFRS S1, sustainability disclosure. The framework was built on 4 pillars around the task force on climate, financial disclosure aligned pillars. So there was a task force that was integrated, or that was formulated and commissioned for this frame, for this standard. And these pillars, 4 of them, speaks to governance. How is a company run? How is a company directed? Speaking to the board structure, management oversight, and links to payments, remuneration, and the organizational structure generally. So IFRS S1, one of the pillars is governance. A company must be governed by a board and committees, and their terms of reference, and their task is to ensure that they provide oversight and direction for organizations. So organizational structure should be provided by the board, and the company should be governed appropriately based on corporate governance principles. Also, another pillar is strategy, which is talking about risks, mitigation, and opportunity exploration. Strategies on impacting the company positively, building a model for the business and the financials, ensuring transition plans, and providing scenario analysis in form of strategy to ensure that the company is well run in the now and in the future. And the going concern concepts and the futuristic approach to running a company is what strategy is all about. Third pillar is risk management, identifying, assessing, integrating, and mitigating risks. So the integration into enterprise risk management and prioritization and monitoring of risk is very important and a key pillar in this sustainability disclosure framework. And the next one is metrics and targets, or the last one is metrics and targets, performance indicators, critical success factors, talking about progress versus targets, industry-specific measures, and methods in disclosing financial information are what should run or help to build capacity and ensuring the actual results of companies are moving the company forward year in, year out. So metrics and targets are the 4th pillars. So looking at the first one, we said governance, strategy, risk management, and metrics and targets are centrally the goal of IFRS S1, which is sustainability disclosure. This is very important. So the general requirements to this standard speaks to connectivity to financial statements. So if you look at the standards, it's not centrally speaking to only sustainability and the impact on the environment. But then for a business to be sustainable, it has to be profitable. So that's why you see metrics like governance, good governance, strategy, risk management, metrics and targets are the 4 pillars. Not just talking about CSR, talking about giving back to the community, but then let the business be sustainable first. Let it stand before it will be able to give back or do the corporate social responsibility demands, perform its demands in those areas. The general requirement speaks to connectivity to financial statements, fair representation, which is balance, no cherry picking. No cherry picking speaks to window dressing and some cosmetic reporting. Also, materiality, talking about information and data that the size and nature could affect investor decision making. So general requirements on this standard is to ensure materiality, and the location, frequency, comparatives, and judgments disclosed in the financial statements should be more sustainable, and it should be sustainable or sustainability centric, in the sense that a business should be forward-looking and ensuring its going concern status are secured based on these general requirements. And the implication is that when sustainability disclosures based on this framework, based on these requirements are integrated, then there's global comparability aligned with the global reporting initiatives and sustainability assurance standard boards. Though we have challenges around data systems, controls, costs, debate on financial versus double materiality issues globally, we also have the benefits. The benefits are enormous aside these challenges. So integrating IFRS S1 sustainability disclosure is very important and needed to ensure that a company is sustainable in the long run. So let's look at IFRS S2. Having looked at the first IFRS sustainability disclosure, IFRS S2 speaks to climate-related disclosure. That's the impact on the environment. And the objective of this IFRS speaks to specific disclosure on the climate and the environment, the risks and opportunities, talking about physical transition and opportunities around ensuring the environment is positively impacted. The framework has 4 pillars, just like the IFRS S1 on sustainability disclosure. The 4 pillars on climate-focused risk speaks to governance also, just like it is in the first framework or the first standard. Governance, talking about the board, the committee oversight, management rules, and integration of pay and remuneration into decision-making and the organizational structure entirely. We also have the same strategy, talking about physical and transition risks, opportunities to explore renewable energy, efficiency, impact on the financial statements, transition plans, and scenario analysis. This is another framework to help build and integrate climate-focused issues in a company. We also have the same risk management, talking about processes for identifying, assessing, integrating, and prioritizing climate risks and opportunities. So risk management around climate-focused conversation will help manage risks effectively. Then the metrics and targets on the climate risk and climate change conversation will help to provide some clarity, provide some credence, because those metrics and targets, if provided, because when you have forecast or budgets, they sprout the company to pursue those targets. So the metrics and targets are important for climate-focused related issues, and ensuring that the metrics and targets are met and also have performance, key performance indicators, critical success factors on that. And the GHG speaks to greenhouse gas emissions. Greenhouse gas emissions. And generally, you see that the greenhouse gas emissions refer to the release of gases into the Earth's atmosphere, excuse me, that trap heat, contributing to global warming. We've been hearing of global warming and climate change. These gases form a greenhouse effect, which warms the planet or the Earth beyond its natural balance. So, conversations around having targets and metrics around greenhouse gas emissions. And in that standard, we have scope 1 to 3, which is climate-related targets, industry-specific metrics, and progress tracking of these emissions, especially for companies that particularly impact the environment by these greenhouse emissions, will help to manage risks around these very pragmatically. So, key features of the IFRS S2 on climate change or climate-related disclosures speaks to mandatory gas emissions, gas-related disclosures, greenhouse gas emissions reporting. So this framework has mandated that companies disclose, and where they have heavy reliance on greenhouse gas protocols, they should be able to disclose appropriately their impact and the emissions of the same. So scenario analysis required for resilience testing on these emissions are very important. You see that from that standard, scope 1, 2, and 3 speaks to the materiality of these emissions. And if the materiality of these emissions are significant, then reporting and disclosure on how to mitigate such risks are also very pertinent. You'll see from those documents provided by IFRS S2. It also aligns with the Task Force on Financial Disclosure recommendations, though we have challenges around scope 3 tracking, talking about the high emissions of this gas, greenhouse gas, and scenario analysis expertise, some of the challenges of industry-specific complexity, and also materiality judgment. Generally looking at companies in the oil and gas space, some of them are the ones that impact the environment negatively by some of these their reporting or their activities around greenhouse emissions. So the big picture generally of IFRS S1 is broadly around sustainability baseline. And we saw the 4 frameworks, almost the same with IFRS S2, which is a climate-specific layer that builds on S1. So sustainability baseline speaks to a company being sustainable around governance, around strategy, around risk management, around metrics and targets. The same thing for IFRS S2, but this one is much more on climate focus conversations. So both these standards aim to improve transparency, comparability, and decision usefulness of sustainability disclosures globally. That's generally the aim. So where we have in an exam requirement, maybe the integration of S1, IFRS S1 and S2 on sustainability integrated into any requirement, you need to think of S1 as the umbrella standard, talking about all sustainability issues, and S2 as the specialist standard, which is specific to climate focus issues. So work around this, just understand it. I'll be sharing the slides after the class. Please go through it. I don't think you have time to be reading the voluminous study text, because the study text, some of the content of the study text was what was integrated into this slide. So please go through these slides with your phone and try to understand what is S1 about. S1 is about the general disclosures around sustainability, while S2 is specific to the climate and impact on the environment. So that's it on the overview to the sustainability standards conversation we have spoken to on IFRS S1 and IFRS S2. So do we have any questions so that we can run? We have just 2 more units before we take our quiz and call it a day. We have 2 more units. Any questions? Any observations?
Questions from me. Is there any way that when we're answering, like as we're practicing the past questions, is there any way that we can maybe look for how to incorporate those aspects into our explanation just to be able to practice how to answer? Would
Yes,
that be
yes.
possible?
Yes,
Okay.
it's possible. So there was some bit of sustainability in May 2025 past question, and we'll need to look at how some of these conversations were integrated into those boxes. Don't forget, we said we have 8 boxes to generally share our thoughts on the case study report. So we'll use May 2025 to practice with that. And I think the pilot question that was released by ICAN has some form of sustainability also. So we use those 2 past questions to practice and look at how to share our thoughts around the standard, around sustainability, the sustainability conversation generally, and see how to integrate them in those 8 boxes. The first box speaking to data and information, see how to use professional tools. I know they will add some financial, maybe ratios, calculations, to especially requirement 1. So you see how to integrate that in your professional tools. Then the third area is to analyze those professional tools, speak to your analysis. Then the fourth one is talk about the challenges and considerations, which is issues and options box. And the fifth one, very important, is your ethical issues box. The sixth one is your evaluative skills and judgment box, talking about risk assessment generally. Then the 7th box is your conclusion, the 8th box, your recommendation. So in practicing, actually, we'll use May 2025 to practice with that and the pilot question. So we use that to practice. And I also, after we've looked at November 2020, we'll try to encourage you to attempt it before we have the debrief class. So that if you attempt it, you'll see where you have issues when you look at the answers. And the good thing about attempting some of these questions under exam conditions is that it gets you exam prepared. It helps you to understand how to attempt real exam questions under exam conditions. So in answering your question succinctly, yes, we would practice with those past questions, and it will get us prepared and also fine-tune our techniques on how to ace the case study paper very seamlessly. So good question. Thank you for bringing that, Angela, to the fore. All right. So any other one? Any other question? Any other concern, contribution, observation before we move to the next unit? Okay. If you have any concern, please share very freely without any fear of reprimand. All right, so let's look at this second to the last unit on the role of professional accountants, our role as chartered accountants in sustainability and sustainability reporting. We are part of the key players in this current move on sustainability. So we need to be able to bring our credibility and expertise. We are central to reporting and reviewing of these reports and the activities. So we need to bring credence to assurance and sustainability in the ESG reporting and ensuring transparency, reliability, and decision usefulness. Especially we have chartered accountants in this space or in the business space that do financial reporting and auditing. So it's very important that we ensure sustainability reporting and assurance, looking at reporting aspect of collecting, measuring, and analyzing ESG data, and using those data to be able to align with global frameworks around the Global Reporting Initiative framework, the Sustainability Assurance Standard Board framework, and also the IFRS S1 and S2 framework, and also the integrated reporting framework globally. So accountants are able to use data to align with frameworks globally that help project these reports and ensure comprehensive understanding of users that read this report. So that's part of our role. Ensuring sustainability reporting and assurance reporting aligns with global standards. And this alignment on sustainability disclosures with financial statements is key. Where we have the IFRS reported framework for financial statements, our sustainability reports should align also with the financial statements and global standards. One of the points on this is also to quantify financial impacts of sustainability risks and opportunities integrated into these reports. Also, for independent assurance providers, talking about auditors also are chartered accountants most of the time, should be able to provide independent assurance on the international standards, assurance engagement 3000 standards. So aligning these standards with the ISAs and the engagement standards will enhance trust in the ESG reports. So these standards should guide how we report activities. And by the time we report them based on our judgment and based on the guide of these standards, then they enhance trust globally and attract foreign direct investments. Another job of a chartered accountant is to improve strategy and performance management. Strategy talks about integrating sustainability into planning of an organization. When we are preparing budgets, like now, budgets are being prepared globally across companies or locally. October, November is the time we talk about budgets. So strategy should be integrated into these budgets on sustainability. And conducting cost-benefit analysis, setting sustainability key performance indicators is a key. And these are the role of chartered accountants, professionals. These are areas that our expertise and our training, our skills are needed. Also, performance, developing systems for measuring and monitoring ESG performance is also very important. These numbers are measurable. If chartered accountant put in the grind, put in the work to help businesses analyze data and to improve outcomes and results. Also, risk management and internal controls are areas professional accountants could help. Most professionals work in the space of risk management, internal controls, internal audits, financial reporting, fraud investigations. There are several spaces chartered accountants are involved. And the key area the chartered accountants could help integrate ESG is risk management and internal controls by identifying and assessing sustainability risks, climate change, resource scarcity, and inequality. Analyze this risk. First, identify this risk. Second, evaluate them, analyze them, and put mitigants in place, and also report on this risk. So risk management and internal control would help, and professionals or chartered accountants are in that space to help facilitate this. Also, the design and implementation of internal controls to ensure ESG data accuracy, completeness, and compliance is very important. You see that risk management and compliance are on the second line of defense of the 3 lines model of the Institute of Internal Auditors. So where large organizations have risk management units, internal control unit, compliance units separately, it could help design and have robust controls around ESG data accuracy, completeness, and compliance. Another area accountants or professional accountants could help is decision support and investment analysis around incorporating ESG factors into investment decisions. This is very important because investment decisions should not be just profit-driven. ESG factors should be integrated, and this is where professional accountants could help lend a voice. Also, the use of cost accounting to track sustainability costs and identify cost savings from sustainability practices is another area accountants could help and enhance this conversation. Also, accountants could educate, advocate, and provide ethical leadership around promoting sustainability awareness and providing training to staff and other members of their team. Also, advocating for strong ESG standards and contributing to their development and their widespread acceptability and implementation are areas accountants or professional accountants could help move this conversation forward. Leading ethical and integrity, transparency, and these are good practices of sustainability. And the skills and competence needed are already built, because some of these trainings, you can see them integrated into the ICAN's framework. And some of these theory, when we get to practice, we'll be able to align them properly. So that's why ICAN does not play with adding some of these global trends into their framework. It's just to get accountants prepared and ready for what they will meet in their workplace or the global space. So these skills and competence are needed. So please, as you've learned and you are tested through this, of course, you will pass the exams, you will qualify very soon. It's important for you to be able to apply it and help your organization thrive in this sustainability conversation. This is very important. So the skills and competence needed around ESG knowledge, reporting frameworks on these global reporting initiatives and standards, the data analysis, risk management, internal controls, the stakeholder engagement, communication, ethical judgment, industry-specific sustainability knowledge are very important for chartered accountants to be able to help harness. And this training has built some capacity for you to be able to continue with in practice or in your workplaces. So the challenges and opportunities around this, and this is why ICAN has brought it to this course, and it's not just in the case study paper. I think it's in SBR and it's in AAAF paper, is to help bridge the skills gap, which is a challenge, and the lack of standardization, the poor ESG data, the difficult integration of financial reporting is one issue. Somebody was asking me on LinkedIn. I posted on ESG. I post every day on LinkedIn. So I posted something on ESG reporting. And he was asking if I have a checklist. Yes, I do. Because we do ESG reporting in my office. So I gave him the checklist, and the guy is from India. He was very happy. Say, wow, it's good. He will integrate this into his company, since I was in healthcare at that time, but he was in another business space or another environment entirely. So this skills gap, as we're having this knowledge, let's spread it wide, move it forward, not just stopping with the ICAN framework, get specific industry or sector area around ESG. You have a lot of data online. You have ChatGPT, you have artificial intelligence to help you build frameworks and templates for your company. If you are in banking space, you could build banking templates, checklists that will help you report on ESG. If you are in FMCG, if you are in oil and gas, whichever space you are, there are industry-specific checklists and reporting formats and templates that you could use to help bridge these gaps on challenges around skill and capacity building. Because you see, we have this opportunity as accountants to shape the global sustainability reporting space and drive ethical practices and enhance long-term value creation. And that is where we really provide value for our organization. So for our exam tip, when it comes to the exams, we need to pass the exam first before we're able to apply it, which of course will pass. You need to think around 3 levels on sustainability: reporting, which is the financial area, and the assurance, which is the auditing area. So think around this in the conversation. Then strategic integration, integrating direction, that is strategy, the apex decision makers, and policy formulation of the company on the sustainability. Then also the third one is you need to think around risk and decision support underpinned by ethics and skills. So think around this during your exams, and when a requirement is provided, your thoughts and what you should be able to pen down should center around these 3 areas we looked at. So reporting and assurance, strategic integration, then risk management, internal controls, compliance, decision support should underpin the decision or the output of ethics and skills. So that's our role generally as professional accountants in sustainability and sustainability reporting. So we have that huge responsibility to foster this and drive this in the public space. All right, so do we have any questions on this? Any observations? Or any comments on this second to the last unit? Okay. All right. I believe it's clear and succinct enough if we are not bringing on any question. Okay, so let's look at the last unit on this conversation, the last unit. And that will be mandatory adoption of ISSB standards in Nigeria. Their mandatory adoption. Where are we currently on the mandatory or the voluntary adoption of these standards in Nigeria specifically? Okay, so we'll be looking at this last unit, and the mandatory adoption of these standards in Nigeria, as we said earlier in one of the units, is that the Financial Reporting Council of Nigeria has adopted these standards for sustainability reporting because it aligns with IFRS. And IFRS S1 and S2 is specific on those standards. So the Adoption Readiness Working Group has issued a roadmap. And let's look at the roadmap. There's the phased roadmap, which started with phase 1, talking about the early adopters. Just this last year, 2024, the phase 1 came into effect. So entities may adopt, that is voluntarily, if they pass the readiness assessment. So these are some of the moves that Nigeria has adopted. So a group called Adoption Readiness Working Group issued this roadmap to help pave the way for the businesses in Nigeria. And talking about the first phase, calling them the early adopters, effective from January 1st, 2024, entities may adopt, that is voluntarily, if they passed the readiness assessment. Then phase 2 is for voluntary adopters. Voluntary adopters could, between 2024 and 2027, build capacity and voluntarily adopt. Voluntary adoption is allowed after having passed the readiness test. So between 2024 and 2027, the voluntary adopters could report on sustainability issues. Now, the phase 3, based on the plan, is that the mandatory adoption will now be for public interest entities. January 1st, 2028, it is mandatory for all public interest companies to report on sustainability. This is the current plan. And for small and medium scale enterprises, January 1st, 2030, they must mandatorily report on sustainability activities. Then for phase 4, the government adoption will follow the International Public Sector Accounting Standards. And the B part of those standards, the timeline is still not yet determined, is to be determined. And the readiness test requirements for entities in the public space must submit documentation, board approvals, gap analysis, implementation plans, sustainability policies, risk management frameworks, governance structures, metrics and scenario models, and ESG training evidence at staged interval before and after reporting date. So for phase 4, most government agencies, based on IPSAS, will begin to report, and that will be after the mandatory adoption for public interest and small and medium scale enterprises. So these plans are on ground, and the Financial Reporting Council of Nigeria will be driving these plans and ensuring that each dates are met and the timelines for these dates are adequately, just like we had the IFRS transition around 2012, 2013, 2014. We will be helping to, the Financial Reporting Council has put these plans, and you could see the success of IFRS transiting from the SAS, Statement of Accounting Standards, to IFRS. It was successful. So I believe this same sustainability reporting plan will be successful based on these phases, just like we had it in phases transiting SARS to IFRS reporting in Nigeria. We also have these phases for sustainability achieved, because if it's driven by Financial Reporting Council of Nigeria and some other regulators, then it's going to be very effective, and it's going to be sustainable also. So the transitional reliefs provided to companies that the climate force reporting allowed is for year one, and the scope 3 on greenhouse emissions disclosure will be deferred for some companies, especially those in the oil and gas space. So flexibility in timing of the first report, which is a standalone permission, will be provided for some companies just to have transition reliefs and be able to transit seamlessly. Also, limited comparative disclosures required initially for some of these disclosures, and the greenhouse emissions measurement methods may continue if aligned with protocol. So some of these disclosure requirements must align with the financial reporting entities period and date, and it must be placed in the annual report after the director's reports. And also comparative information required is required except where relief applies. So there are some reliefs just to make sure some organizations are not stressed in the area of sustainability reporting. And the explicit statement of compliance needed is by the discretion of the companies for now. So statement on compliance will be needed, but when it transits to the date of mandatory disclosure, then that will be necessitated for all companies. So reports must be also made public, available, just like you have for public interest companies, public listed companies, where they publish their annual reports. Sustainability reports will be made public for the public to see how companies are impacting the environment and also disclosing sustainability activities. Also, climate-related metrics around companies disclosing greenhouse emissions, transition and physical risks, opportunities, capital development, internal carbon pricing, remuneration linked to climate goals, are climate-related matters and metrics that will be integrated into these reports. So my final thoughts on this is that the ISB adoption in Nigeria and the disclosures will become mandatory very soon, but the transition has to be phase by phase. So reinforcing the critical role of professional accountants in ensuring credible, reliable, and decision-useful sustainability reporting is very imperative. So chartered accountants are part of the major players in facilitating this. So just like we said, the transition from SAS to IFRS was seamless. The phased transition, phase by phase, came to fruition, and it was successful. So it's the same for professional accountants, and that's why ICAN is getting us ready, so that when we get to that space, we'll be able to align properly and ensure that we make this sustainability conversation, this sustainability global drive, a reality in Nigeria. This is very, very important. Okay, so ladies and gentlemen, that's it for the conversation, and this will bring us to the end of chapter 8 on sustainability and the sustainability reporting, responsible financing, equator principles. We spoke about in chapter 8, which is a new addition, and that is why we took 1 or 2 periods to really explain it, and hoping maybe it will be tested in this diet since it's a new topic. Of course, we should be able to expect it in the new diet, as ICAN may bring it on for the November 2025 diet. That's why we stretched the conversation that long, but this will be the last class, and we'll move to our short topics. Our next topic is going to be on ethics and the professional accountant, which is chapter 9. Then we'll look at chapter 10, how to write an executive summary or writing a professional report. Those are the 2 conversations we'll be looking at. So after this chapter 8, we'll look at our November debrief on 2020, looking at 2020 November debrief. And then after two chapters, like is our custom, we'll now look at May 2025. Then we'll look at another two chapters. We'll look at the pilot question. Then we'll look at chapter 13, which is the last chapter on soft skills for accountants. So just go through the study text. Please, I hope we all have the new study text so that we can glance through them, even though we have our slides coming. But then you still need to the study text to be able to refer to some other concepts that must be solidified. All right, so those are the general conversations or the conversation we had on sustainability, and that will be the end of it. We have, as our custom, quiz questions we normally take after every chapter, just to test to see some of the concepts, if we understood them